Evening to all of you, and I'm very grateful that all of you have come together. And the idea of this webinar is perhaps to get the right messaging out. There have been there is huge amount of concern, panic, or I would say curiosity amongst investors when you see and when you read a headline which has come from Franklin Templeton. The fact that mutual funds sahi hai, the whole cause with AMFI and all of us are championing. Does that in this time of crisis, how does one really not lose faith in mutual fund, and how should one understand and react to the news and also understand the implications of this on the economy and also on individual investors? So I'm just going to very quickly introduce the panel. I've got Nilesh, Shah, Chairman of AMFI, Mr. Venkatesh, he represents AMFI CEO there, A. Bala of Birla AMC. We got Sunil joining from Sundaram AMC, and Ashwini Bhatia would be joining us in moments from now. He represents SB AMC. Nilesh, I'll keep this webinar about people and perhaps people who got concerns which would be directly pointing to the panel. But let's start with opening remarks, and the opening remarks are very simple. What has happened with Franklin Templeton Mutual Fund has caused some degree of anxiety, curiosity, and panic. The whole campaign of mutual funds sahi hai, it gets challenged when you see an episode like this. Why do you think this is one-off and it is not the universal fact of the economy and the universal state of the Indian mutual fund industry?
So one, Nikunj, if we go to 2008 experience, where we had seen one or two foreign funds shutting down their operations and stopping redemptions. In that 2008 era, almost other than those one or two exception isolated cases, everyone continued doing business as per normal. We functioned normally and we ensured that investors' money were redeemed. Now, why did majority of mutual fund couldn't do that and only one or two couldn't do that? That was primarily driven by quality of portfolio. If you remember, there was one scheme where at one point of time, 100% portfolio was invested only in one real estate paper which had defaulted. 100% of the portfolio. On the other hand, those mutual funds who continued doing business normally, they were very well diversified and they didn't have papers of that risky nature. So my recommendation to investors through this webinar is that please look at funds in which you have made investment at their individual portfolio. See for yourself if those investments are worthy of your money or not. If you see portfolios which are invested into treasury bills, government securities, certificate of deposits of banks, commercial paper of AAA rated companies, PSU bonds, corporate debentures of AAA, AA plus, AA rated companies, and you feel comfortable with those names, then please believe in your own judgment that with this portfolio I am diversified, I am well protected. People who had riskier names, riskier profile, they have to suffer. But people who have good quality credit portfolio, good liquidity profile, they'll be able to continue business in a normal scenario. Now, Nikunj, I also want to point out one risk that if all the investors come together to redeem in one day, then the biggest of financial services institution will collapse because your portfolios are geared for normal expected redemptions plus contingencies. When a person invests in debt fund, he's looking at 3 years on the credit risk.
Fair point. Bala, opening remarks from you. Debt was always supposed to be a safe bet. In this economy, when credit squeeze is real, and when IMF is talking about the biggest recession we have seen in last 100 years, it clearly means that we are in for tough days. So if the economy is unlikely to improve, if the credit squeeze is going to be there, how should one really approach fixed income and debt instruments? Because we know that this is not the end of the pain for the economy or the end of the pain for the credit stroke the fixed income market.
Yeah, I think clearly, Nikunj, as Nilesh also mentioned, I think fixed income is divided into 2-3 parts. One, of course, the credit quality of the underlying investment that you make, then how well you are diversified within the portfolios, and then how the mixes actually is built in order to ensure the portfolio liquidity is taken care, the form of breakup between AAA and AA and so on and so forth, and also the kind of maturity profile you maintain. And clearly, if you look at the whole mutual fund industries, the classification that has come is clearly defines that each of the schemes, what is the mandate and what maturity they have to invest, what kind of credit quality they have to invest. So this is something which is now built over a period of time as a part of the refinement that Indian mutual fund industry has brought after the learning that we saw in 2008. And before that, we saw in 2002, there was a huge amount of default that happened. Then even in 2013, there was a spike in the interest rates that happened that also led to some kind of crisis. Despite seeing all the cycles of the credit market cycles, the interest rate cycles, the mutual fund has established about more than 25 years of track record. And this comes, the incident that has come today, I think what you're talking about, is comes once in 10 years, like a black swan even happens. At that time, of course, you see some bit of pressure gets built up on the market. But otherwise, from the fixed income investors' point of view, I think if you give a longer period of time, and however, actually the portfolio is built, as long as you don't have too much of credit losses, and fixed income as a scheme, if they stick to the mandate, as I mentioned earlier, the diversification and liquidity of the portfolio is taken care. At the same time, the way portfolio is constructed does generate return in the long run. I think that's something which I think one should look at as far as the fixed income portfolio is concerned. I've seen the cycles, but still that portfolio are given very good return. But times like today, I think earlier I asked about question about the FT. Clearly, I think the FT related issues is an isolated cases. Why I'm saying isolated cases is I think what Nilesh mentioned about somebody gets too much of redemptions and they have to meet the redemptions. What are the choices they have? They have the choice to actually liquidate the securities at whatever the yield that they're getting. It's called a throwaway price. If it's sell at a throwaway price, actually it incurs loss to the investors. Therefore, the choice that he has to take is to sell at the throwaway price to make the redemptions or wait for some times and so on and so forth. These are some of the questions which are born in his mind, and probably he's taken the call even at the risk of his own reputation. He has actually taken the risk of putting a stop on the redemptions, which that does not mean the underlying portfolio is completely gone. And then also one should understand the portfolio value is not gone. The only question is what portfolio value will realize by selling the securities to pay back the investors. And that's being the case, I think one should not unnecessarily panic during the phase of FT that all funds will have a similar nature. Therefore, from investors' point of view, as long as you, as Nilesh mentioned, that look at the portfolios, how the portfolios have been constructed. And if I say 30 days instruments in which I'll invest, if the 30 days is the duration, you must accept that his fund is actually following the walk the talk. And these are the checks and balances they can create on fixed income while choosing fixed income schemes.
Okay. We have about 500 participants already, and we're only couple of minutes into the webinar. Sunil, a request is coming from the audience here that they want the next question to be answered in Hindi. Someone request you to speak in Hindi. And again, simple मुद्दा है सुनील, एक इन्वेस्टर को, निवेशक को पैनिक क्यों नहीं करना चाहिए? बिकॉज म्यूचुअल फंड्स, एक म्यूचुअल फंड में प्रॉब्लम है, दूसरे में क्यों नहीं होगा, और अगर नहीं होगा तो उसकी गारंटी क्या है?
नहीं, बात ऐसी बनती है निकुंज, फिक्स्ड इनकम म्यूचुअल फंड में इन्वेस्ट करने का जरूरत क्या है लोगों को, क्योंकि बैंक डिपॉजिट जो एक फिक्स्ड इनकम इंस्ट्रूमेंट है उनसे जो उनको ब्याज मिल रहा है वो बहुत कम लग रहा है, तो इसलिए उनको ज्यादा रिटर्न के लिए पाके वो म्यूचुअल फंड में आ रहे हैं. तो यहाँ पे दो चीज होती है, एक होती है रिटर्न, दूसरी होती है लिक्विडिटी. अभी जैसे आपको बैंक में भी फिक्स्ड डिपॉजिट में लगाता है, सेविंग्स बैंक में, सेविंग्स बैंक एक लिक्विडिटी व्हीकल है और फिक्स्ड डिपॉजिट एक रिटर्न का व्हीकल है. अब जब आप निवेश करते हो एक म्यूचुअल फंड में, तो आपको मन में रखना चाहिए कि आपकी कोशिश क्या है, कि आपको एनी टाइम लिक्विडिटी चाहिए, तो आपको पोर्टफोलियो देख के देखना है कि क्या ऐसी सिक्योरिटीज बेच सकते हैं मार्केट में इमीडिएटली मेरे को पैसा दिलवाने के लिए. दूसरी, अगर रिटर्न चाहिए तो आप समझिए कि म्यूचुअल फंड रिटर्न कहां से देती है फिक्स्ड इनकम में. इसका प्रोसेस अंग्रेजी में कहते हैं डिसइंटरमीडिएशन, यानी बैंक जो काम करती है म्यूचुअल फंड भी वही काम कर रही है, यानी लोगों का पैसा उठाकर अपने खर्चा, जो भी ऑफिस चलाने का खर्चा अब्सॉर्ब करके वो भी लेंड करती है, और लेंड करने वाला पैसा वापस डिपॉजिटर्स को देती है आफ्टर कॉस्ट. तो इसमें क्या होता है कि बैंक के लिए ऑफिस, नेटवर्क, ऐसे बहुत कॉस्ट होते हैं, तो वेयर एज म्यूचुअल फंड सीधा उनका पैसा लगाती है विद अ वेरी लो कॉस्ट. तो ये कॉस्ट ऑफ सेविंग जो होता है वो आसान होता है इन्वेस्टर को. तो मेरे ख्याल में ये जो इवेंट हुआ था एक फ्रैंकलिन टेम्पल्टन फंड हाउस में, तो
तो उनको लोगों को ये देखना चाहिए कि कौन सी तरह के फंड में, जैसे क्रेडिट रिस्क फंड तो नाम में लिखा है कि रिस्क लेती है, तो जो लिक्विडिटी वाला पैसा आपको उधर नहीं लगाना चाहिए, राइट। तो ऐसी बात मैं कर रहा हूँ कि एक टेम्पल्टन में जैसे बाला सर ने अभी बताया ना कि एक लिक्विडिटी के कारण उन्होंने क्या किया, 7,000 करोड़ उनको सडनली रिडेम्पशन पिछले हफ्ते आया था। तो इस हालत में सभी अभी मैं किसी कंपनी को पैसा दे रहा हूँ 3 महीने 6 महीने के लिए, मैं कल जाके वापस पैसा नहीं पूछ सकता हूँ ना। तो अगर आपको लिक्विडिटी चाहिए तो लिक्विड वाले फंड में लगाइए, और ऐसे फंड में जैसे प्रेशर आता है रिडेम्पशन, सब लोग जाके पैसा मांग रहे हैं, तो टेम्पल्टन क्या कर सकता था, तो इसलिए उन्होंने बंद कर दिया। अभी बाकी एएमसी देखिए, उनके पोर्टफोलियो आप समझिए कि ऐसा नहीं कि ओवरलोडेड विद लॉन्ग टर्म सिक्योरिटीज होनी चाहिए। जो भी आपका लिक्विडिटी चाहिए, जो पैसा आप लिक्विड फंड में निवेश करेंगे तो आपको कोई दिक्कत नहीं होगी अपना पैसा वापस लेने में। मगर अब ज्यादा रिटर्न 3 साल 5 साल वेट करके आप पाने के लिए वेट करने के लिए तैयार है, तो आप थोड़ी रिस्की स्कीम में पैसा लगा सकते हैं। और ये मान लीजिए जब आपको पैसा चाहिए उस टाइम में 3 महीने पहले आपको लिक्विड में उसको शिफ्ट करना चाहिए, क्योंकि कौन जाने के 3 साल के बाद जब पैसा आपको चाहिए ऐसी एक घटना और भी नहीं हो रही है। तो ये अगर आप समझ के ठीक से करते हैं, आप देखिए बाकी करीबन 90% म्यूचुअल फंड इंडस्ट्री की एक्सपोजर AAA सिक्योरिटीज में है, यानी ज्यादातर म्यूचुअल फंड मैनेजर्स बहुत सेफ अपने इसमें लगा रहे हैं। क्रेडिट रिस्क फंड में जहां नाम साफ साफ बताता है कि हम रिस्क ले रहे हैं, वहां पे थोड़ा लगाते हैं, मगर लोगों को सावधान रहना चाहिए कि आप पोर्टफोलियो को समझिए कि किस तरह की कंपनियां। अभी हाल में आपको हमें पता है तो लॉकडाउन के कारण एयरलाइन कंपनी की प्रॉब्लम है, तो आप थोड़ा आपका दिमाग लगाएंगे और देखिए कौन सी पोर्टफोलियो है, तो आप इजीली जज कर सकते हैं कि मेरी लिक्विडिटी ड्रिवन पोर्टफोलियो है या रिटर्न ड्रिवन, उसके माफिक आपको निवेश करना चाहिए।
Okay, we got a record participant now. About 600 people have already chipped in, and again, like I said, it's just been 10 minutes into webinar. Lots and lots of questions are coming, and they are related with credit and risk. Mr. Venkatesh, good evening to you once again. Thank you for joining us. Mutual fund sahi hai. That is the campaign. When you see an episode like this, how will you defend it, sir? Mr. Venkatesh.
I would definitely again reiterate saying that mutual fund sahi hai. This is a one-off incident which has happened. We need to understand that what does a mutual fund do? It actually takes care of the disintermediation, like what Sunil said. It doesn't stop with the disintermediation alone. It transforms various risks in the sense that it transforms liquidity risk, it manages the credit risk, it manages the interest rate risk. All the three risk transformation is being done by the mutual fund. So to that much extent, the mutual fund manager plays a very pivotal role in managing all these things. If you look at the overall mutual fund industry size, the industry size is around 24 lakh crore, and if you look at the debt funds, it is somewhere around 14 lakh crore. So out of that 14 lakh crore, somewhere around 26,000 crore was our schemes where FT had done the winding down. If you look at it from that angle, it's a small percentage. It's hardly around 1.46 to 1.5%, which is there. So which is understood, which is a credit risk which generally they are managing. So to that much extent, we should give credit. And as Mr. Bala said, it doesn't mean that the funds have been wound on means that you don't get your money back. You will definitely get your money back once the realization happens. So I think that is where it is. So I would still vouch and say that mutual fund sahi hai.
Ashwini, this question is coming your way. I'll pick up one question which is there on my chat window, my webinar chat window. And Ashwini, the question is that while most of mutual funds are saying that, look, we invested in AAA, there are some mutual funds which are also in AA. Should one be wary of mutual fund schemes and mutual funds which currently have exposure to AA? Ashwini?
So it is, I don't know which scheme this customer would be invested in, but as part of any scheme, you'll always have a mix of AAA, you'll always have a mix of AA. So obviously, if you're talking only of AA, it could possibly be a credit fund, credit risk kind of a fund. But again, this is not a time to get out, number one. Number two, also, I mean, all the viewers must understand that these are unusual times. And this crisis is actually much different from what happened in 2008. So in a way, the economy has stopped. And should you exit or should you, stay on? I would still say that whether you are in AA or whether you are in AAA, you should stay on. Instead of having a notional loss, don't book your loss and don't make that into a cash loss.
Okay, Ashwini, next question. Again, I'll have to take the clock back here to 2019. And these are concerns. I'm not using the word allegation here, but these are obvious concerns which are coming from investors that debt funds they had to face a difficult time post the IL&FS crisis because of the exposure to NBFCs. There was exposure to DHFL. Those learnings should have been implemented, but what do we see? A next credit crisis and schemes are blowing up. Ashwini.
So what happened in 2018 post IL&FS and then DHFL? Look at it as a sum of a whole. So what is the percentage of these schemes of the total mutual fund AUM? And finally, we are saying that this is a pass-through product. Okay, and how much have actually the losses been? The losses have actually not been too much. And I'm not trying to defend to you or say that, whatever decisions were made or whatever, they were right. But these things kind of happen, and these are very, very unusual times. We have, of course, learned our mistakes. And what we are facing today is no comparison again to repeat, of what happened. Have we learned from our mistakes? Of course we have, we do our credit analysis as a fund house. We do our bottom up. So very difficult at a certain point. But, it's like somebody having a house in Bombay and, he's say living on Pedder Road and it's worth say 50 crores. And today if he goes to the market, he gets 30 crores. So was it a right decision or not? People should not lose patience. As a vehicle, I think mutual fund is a good product. Mutual fund absolutely sahi hai. This is a very unusual circumstance where the cash cycle has stopped, the working capital cycle has stopped, the economy has halted. My request to all investors would be to have patience. This is not the end of the world.
Okay. Bala, again, pretty much a question on similar lines, Bala, which is that if the economy is in trouble, how can mutual fund managers be sure that there is going to be no risk, there is going to be no crisis, and why do they remain confident that at a time when AAA rated companies also are not in operations, their business has shut down, that the investment by fund managers will be safe? Will fund managers not come back, say, blaming everything on the COVID crisis?
Interesting, Nikunj. I think I just take on from what Bhatia mentioned about this IL&FS crisis happened in 2018, September 2018, and followed by that we had a series of concern coming around the NBFCs and so on and so forth. Just imagine exactly 1.5 years back, the entire mutual fund industries had overweight exposure to some of the names which you would have seen in the last 1.5 years have been struggling to raise funds. I think they all have moved out of the mutual fund industries. They have reduced the exposure significantly and then shifted more towards government bonds, treasury bills, PSUs, and more AAA PSUs, and made the portfolios more safer. Safety has become the significant focus area for most of the money managers, including ourselves. That's why I think portfolio got shifted. Again, we talked about the credit losses that one would have seen actually in the mutual fund space, and assets of about 14 lakh crore. That's what we manage. And out of 15 lakh crore, currently we are managing, the amount is a question mark, which in the last 2.5 years would have happened, which would have probably become a default or maybe a potential loss that one could have incurred on the portfolio, would not be more than about 7,000-8,000 crore. The amount that involved is very small. If you have to look at the diversification among all the investors, in percentage term from each investor will not be more than say 0.5% or 0.6%. Only on those funds we take credit risk. Otherwise, if you take 92% of the funds which focus on high quality, highly liquid, highly rated bonds, I think they have remained more or less safe. I think from a money manager's point of view, mutual money managers, I think we must, I have also been in the industry for 20 years, like Nilesh has been there for the last so many number of years. All the panelists who are in this panel, all of them spent good number of years more than 2 decades and 5 years in the market. And fixed income money managers generally, they actually see the risk coming in, that they cut down the risk quite substantially. I think this illiquidity is something, it is not our hand. Illiquidity is a function of the market sentiment, the Reserve Bank of India, the way they react. The banking as an industry, which is the larger piece of the banking financial sectors, I mean, they also, of course, play a role in terms of providing liquidity. That's something is different from a credit call point of view. I think most of the money managers have actually adjusted the portfolio more skewed towards safety. I think today most of them would be talking about safety, liquidity, and return is coming from the fact that how they are adjusting the portfolio.
So Bala, I'm going to be very specific here. There are 3 questions which have come on Birla schemes here. Can you tell us about Birla Credit Risk Fund and how are you ensuring that our money is protected? In equity, we can take volatility, but in debt, if you have to take volatility, it's a very nightmarish kind of scenario. Bala.
Yeah, I think interesting. I think credit risk fund. I think the mandate of the fund itself is to take credit exposures which are below AA and the A-rated paper. This fund is one of the fast-growing fund. I think after this IL&FS crisis, where we got the first one get hit in IL&FS in some of the SPV subsidiary companies due to IL&FS going for a moratorium, and that of course get moratorium. Not the money has been denied, but of course Government of India announced the moratorium. The money got stuck, and therefore it got downgraded. Therefore the scheme had to suffer for a brief period of about 1.5 years. But I think on the basis of the portfolio reconstruction that has happened, I think today 40% of the portfolio is relatively liquid and invested in AAA and govies. Roughly about 35% is invested in AA paper. Would be roughly about another 30% would be in AA plus paper, which are state government backed securities. In that sense, portfolio of course is absolutely clean at this point of time. And whatever of course the losses would have happened in this portfolio due to the downgrades and mark-to-market valuations. And I must also mention that one of the IL&FS assets that we had in the portfolio was the first assets to become a green under the NCLT judgment, which means the underlying portfolio construct was not bad, except of course it was a bad time we got caught in that space. But in my view, I think once the COVID issues are over, as the resolution gets fixed finally, we'll probably see some money even coming back to the scheme.
Okay. Mr. Venkatesh, it again comes back to the filter and the processes and the checks and balances which AMFI needs to adopt. What role do you think AMFI will play? It is great to talk about mutual funds sahi hai, but we also want to understand the risk sahi kab hota hai or investing mein sahi kya hota hai.
I understand from where you are coming, but essentially what we will like to amplify is the fact that there are best practices put out by AMFI as an institution, which is given as a guidance note for the entire mutual fund industry to follow. So some of the best practices relate to even the risk management principles that the mutual fund industry needs to follow. The SEBI also puts out the risk management guidelines periodically. The exposure management, the liquidity management, all those things are really amplified in the SEBI circular as well as in the AMFI best practices guidelines. So to that much extent, we give enough guidance to the mutual fund industry to follow the best practices both nationally and internationally. So I think enough guidance is there. But having said that, I will have to say that definitely the mutual fund managers are doing their job better. That is why if you see the risk, the percentage of risk is very, very low compared to the total AUMs that they are managing. In a banking sort of a scenario, a credit cost of 1% is supposed to be one of the best run banks. If you look at the mutual fund sort of a segment, the credit cost is much, much lower than the 1% that you look for a better run bank. So I would say that considering the circumstances under which the mutual funds are performing in the current circumstances with their best risk management standards, including the underwriting practices that they follow and the committee-based approach that they follow and the oversight and monitoring which they continue to do through periodical client interactions and client site visits and all those things. I think they are doing a reasonably good job to protect the risk of the portfolio.
Okay. Nilesh, are you back with us? Can I come to you?
Yes, I'm there.
Okay, wonderful. We cannot see you, but we can hear you. I guess that is more important. I mean, as long as we can get your views right. So Nilesh, I'm going back to that very simple point and would request you to perhaps speak this, for our English audience here. A lot of request is coming that we should address this in English. Nilesh, my question is very simple. Why should people not panic and not redeem? अभी short term में Nilesh economy recover नहीं होगी. Short term में there are going to be pain. More companies will get into trouble. Banks are not lending. So why should not one exercise caution and why should one not redeem?
So, निकुंज भाई, अगर आप मार्च का महीना देख ले तो तकरीबन 20 मार्च से लेके 25 मार्च तक बहुत सारे लिक्विड फंड की एनएवी नेगेटिव रिटर्न दे रही थी. लोग वहां पे शॉर्ट टर्म में पैसा लगाने आए थे, 7 दिन, 10 दिन, 15 दिन, और उस एक वीक के अंदर बहुत सारे लिक्विड फंड ने नेगेटिव रिटर्न दिया बिकॉज ब्याज की दरें ऊपर चली गई थी. वहां पे कहीं पे भी क्रेडिट रिस्क नहीं था, बट ब्याज की दरें ऊपर गई तो मार्क टू मार्केट लॉस हो गया. नाउ 27 मार्च को आरबीआई ने रेट कट किया, रिवर्स रिपो रेट के ऊपर, रिपो रेट के ऊपर सीआरआर कट करके लिक्विडिटी प्रदान की, और एक ही दिन में लिक्विड फंड ने वो पिछले 5 या 6 दिन के नेगेटिव रिटर्न को कॉम्पनसेट कर दिया. सो जो इन्वेस्टर्स पैनिक में भागे उनका रिटर्न नेगेटिव हुआ. जो अपने समय के अनुसार बैठे रहे उनको जितना रिटर्न चाहिए था वो मिल गया. एंड ये अनुभव आज से 1 महीने पहले का है. सो अपने में एक कहावत है कि जल्दी का काम शैतान का. जब आप पैनिक में डिसीजन लेते हैं तो ऑब्वियसली आप गलत डिसीजन लेंगे. मैं ये नहीं कहता कि आप हमारी बातों का भरोसा करिए, हम पे मत भरोसा करिए, लेकिन हमारी जो पोर्टफोलियो है उसके ऊपर तो आप भरोसा कर सकते हैं. अनलाइक बैंक, इंश्योरेंस कंपनी या अदर फाइनेंशियल सर्विसेज जिसमें आपको पता नहीं है आपका पैसा कहाँ पे है, हमारे सारे फंड के पोर्टफोलियो हमारी वेबसाइट पे अवेलेबल है. 31 मार्च तक का पोर्टफोलियो है. हम कोशिश करके कल का पोर्टफोलियो भी लगा देंगे ताकि आप खुद देख सके अपने आप कि आपका पैसा कहाँ पे पड़ा है. अगर आपका पोर्टफोलियो 90%, 95% ट्रिपल ए रेटेड एसेट्स में है तो ये समय बहुत कठिन है, बट ये कंपनीज ने इससे ज्यादा कठिन समय भी देखा है. आपको शायद पता है टाटा स्टील के बारे में, जब द्वितीय विश्व युद्ध चल रहा था तो उनके पास सैलरी देने के पैसे नहीं थे और उनके प्रमोटरों ने अपनी फैमिली की ज्वेलरी गिरवे रख के पैसा उठा के सैलरी के पैसे चुकाए. इस कठिन समय से टाटा स्टील उभर के बाहर आया था और आज भी चल रहा है. तो अभी तो कम से कम द्वितीय विश्व युद्ध जितना कठिन समय तो नहीं है. आप कैसे कह सकते हैं कि जब आपने टाटा ग्रुप में निवेश किया है तो वो कंपनी कल पैसा नहीं देगी? जब उनका समय खराब था तब भी उन्होंने बड़ी मेहनत से, खूबी से पैसा चुकाया था, तो अब भी वो करेंगे. तो आप हमारे पोर्टफोलियो के ऊपर विश्वास करिए. एक एक फंड के पोर्टफोलियो उनकी वेबसाइट पे अवेलेबल है. उसमें आपको ऐसे ही नाम मिलेंगे जहां पे गवर्नमेंट अंडरटेकिंग है, जहां पे ट्रिपल ए रेटेड कॉर्पोरेट्स है, जहां पे ट्रेजरी बिल्स है. ये सारी मार्केट आज भी रीजनेबली ट्रेड होती है. निकुंज भाई, मैं फिर से एक ही बात कहना चाहूंगा, अगर सारा रिडम्पशन एक ही दिन में एक साथ आ गया तो कोई पोर्टफोलियो उसको पे करने के लिए तैयार नहीं है. एंड अगर और 2 मिनट दे तो मैं 2008 का एक्सपीरियंस भी बताना चाहता हूँ.
जी प्लीज.
वहां पे आपको पता है तो 2008 के समय में भी म्यूचुअल फंड क्राइसिस के दौर से गुजरा था. एंड एक कॉर्पोरेट का किस्सा कहना चाहता हूँ. जनरली लोग कहते हैं कि कॉर्पोरेट इन्वेस्टर बहुत समझदार होते हैं. उन्होंने जो एक एफएमपी थी, फिक्स्ड मैच्योरिटी प्लान, जिसका पोर्टफोलियो पूरा बैंक सीडी में इन्वेस्टेड था, उसमें से लोड देके रिडम्पशन करके निकल गए थे और उन्हीं बैंकों में जहां पे हमने पैसा डाला था वहीं पे निवेश किया. ना इस तरह का पैनिक डिसीजन लेके आपका कोई फायदा तो हुआ नहीं, बिकॉज आपका अंडरलाइन क्रेडिट रिस्क इस पोर्टफोलियो में बैंक था, उसमें भी बैंक ही रहा, तो आपको मिला क्या? आपने तो नुकसान ही किया. तो जल्दी में डिसीजन मत लीजिए. आप खुद के एनालिसिस पे भरोसा कीजिए, पोर्टफोलियो देखिए, क्रेडिट क्वालिटी देखिए, एंड जैसे लिक्विड फंड में 4-5 दिन के लिए मार्क टू मार्केट लॉस आया था, बट जो निवेशक इन्वेस्टेड रहा उसको कोई तकलीफ नहीं आई.
Okay. Lots of questions which are coming again, that what could be the impact of this on equity markets. In equity markets also there has been a challenge. So Ashwini, my next question to you is very simple, that in last 10 years, gold and equity markets have given similar returns. In gold, I did not face any mental agony. More than me, my wife was very happy that घर में सोना है. As an equity investor, I took ups and downs and market volatility and global events. Yet in 10 years, which is really long time, if the returns are equal, what should I do?
So my preference is still equities. All my lifetime savings are in mutual funds.
Sir, your wife is not on the call. Is that what you're telling us? That
my wife is also nearby, and our daughter say कि Dad, हमारे को तो आपकी jewelry चाहिए ही नहीं. Okay. So gold can be a part of your asset allocation, and the increase in gold price has been in the last 7-8 months only. For a long term, I don't think gold is a great asset. Somebody may talk this about oil also, but oil also went to negative rates. Over the long run, you take any cycle, you take it right from 93. There was a crisis in 2003. There was a crisis in 2008. There was a crisis in 2013. But the best returns, of course, have been in equities. Gold this time has been an outlier. My feeling would still be that please be careful when you get into such assets. And my money would still be into mutual funds.
Okay. Mr. Venkatesh, I'm again going back to a couple of questions which are coming from the webinar. Pardon me, I wanted to take the gold conversation forward, but lots of questions are coming on what is the road forward for Franklin. You represent AMFI, so let me throw this difficult one at you. What should investors of Franklin Templeton Mutual Fund expect in terms of a procedure? Can you break it for us? Because that's where I think a lot of questions are coming.
I believe that essentially they have wound down these schemes. So to that much extent, it's a stop for all redemptions at this particular point of time. So the open-ended fund suddenly becomes like a close-ended fund. Only thing is the close-ended maturity date has not been specified. They will have to wait patiently. The market, once the economy moves up, the market improves, then definitely the fund house will start selling those assets, so it becomes liquid again. The moment it becomes liquid again, they will get their money. That money will then be given back to the investors proportionately. So to that much extent, it is not as if bunching up of redemptions is going to come and hit them for a panic fire sale sort of a thing. That is not at all there. So they have avoided that fire sale, which is in a better interest of the investor only. So they will have to wait for that. Maybe they will have to wait for a couple of months' time for the markets to improve, for the proceeds to come back to them.
Okay. Sunil, I want to go back to that question because it's a dilemma which I have to handle with. My wife says, Sunil, सोने में पैसा डालो. बेटी नहीं है मगर बेटी की भी तो शादी करनी है Sunil. Let's not forget that. How does one manage this balance, Sunil? Because gold has given good returns and equity markets have not managed to even give returns despite the risk and the volatility associated with it in last 10 years. Sunil, how can one make money and keep wife also happy? Remember, the wife is the underlying part here.
So English or Hindi?
As long as you can keep your wife happy, language barrier doesn't matter.
Okay, so I have a slightly different take from what Ashwini said. So what are you doing? You are comparing in a seesaw. You are comparing one asset class at its lowest tenor with another class at its highest tenor. So it's potentially unfair when everything goes through cycles, right? You choose to pick the one asset class at the lowest bottom of the cycle, pick the other one at the highest point, and say, you don't equal nahi hai. So the point is life is cyclical. Business cycles, see, death, taxes, and business cycles are all three permanent entities in our life, economic life. So in this cyclicality business, what I'm trying to say is, whether you put in gold, fixed income, bank deposit, keep your money in cash, you know the story, right, of the two brothers One was a drunkard and one was, very stingy, very saving money guy. The drunkard was going on drinking beer and he was so lazy that he kept the beer cans inside the room. The guy who kept it in cash, one day what happened? The inflation took the aluminum value of the cans and the drunkard proved to be rich. So you can't say that is the basis for saying that, oh, keep drinking in your life, right? So the cyclicality part, what I want to bring out here is that first thing, buy when there is fear, sell when there is greed, is universal, whether it's for gold, it's for fixed income, it's for equity. One. Second, buy low, sell high. So when something is very high, that's the time to sell. When something is very low, that's the time to buy. So the key question is, today equities are low, so you got to buy equities. Today gold is high, you got to sell down your gold. Not that we go from 100 to 0. So why is that? Every asset class, because in your life, you can't predict when you need money. To some extent, you may know my son's education to go abroad. I know broadly in a 2-3 year time frame, I need this. My daughter's wedding, this I need. I'm retiring, you know. So broadly, if you know the longer term goals, what happens is the benefit of having assets in all the classes is that depending on which is at a cyclicality, that will bail you out. But that doesn't mean that that is the best asset classes for all time to come. So proper asset allocation basis your age, your risk profile, the timing of your needs is the need of the hour. And the second point is whatever your goals, whether you want to say that no, gold is, let us say gold was at its lowest, right? Obviously, gold's allocation should be a little bit higher. Doesn't mean that if you have a 5-year time frame that you are, today gold is low, that 5 years later it will be at a high. So assuming that even it is at a high, the fact of the matter is, as we are seeing with the fixed income markets today, that suddenly the market has collapsed and somebody who wanted liquidity from the FT scheme is not able to pull his money out. So the key point here is you plan to your goals, but a cushion, a few months before the goal, you push it into a very liquid overnight fund or even into a savings bank account. So the key point here, Nikunj, is to address the point of gold, is gold should always be a part of your portfolio, but whether you make it 2% or you make it 25%, that varies depending on relative to the other asset classes, right? Today, fixed income asset class is not in good shape. Equities asset class is not in good shape. So today, your allocation should be more to those asset classes which are not in good shape, so that in the future, you know that what goes up must come down and what has gone down must go up. This is the basic truism of life. And so this asset allocation mix. So the point is, to keep your wife happy, is that you buy jewelry when the gold prices are high, and you buy paper gold when the gold prices are low, because then the wealth creation really comes to head.
Okay. Nilesh, again, the questions are a blend of what's happening to the economy versus what is happening with the entire FT issue. So the next question, Nilesh, perhaps is largely dominated towards equity, which is that everybody is calling it unprecedented. The new normal in the world will change. If the new normal in the world will change, are mutual fund managers really prepared for that? Because I looked at the portfolios, as per the last declared portfolio, a lot of schemes have not made any changes. Nilesh.
Nikunj bhai, what we are going through is an unprecedented medical crisis which has metamorphosed into real life crisis. In my 25-year plus investment career, I have seen medical crises like plague, SARS, bird flu, Ebola, Zika. And I have also seen financial crises like 2008 subprime, 1997 Asian crisis, 2013 taper tantrum, and 2016 demonetization. But I have never seen a combined crisis of a medical situation as well as real life. Now, I'm also learning as I'm passing through it, like every other person on this call. Now, we have to make intelligent guess and try to keep open mind and analyze data. Now, for example, it is no brainer today that a leveraged company will find it extremely difficult to survive the downturn. So as a fund manager, I'm trying to move away from leverage company as much as possible. Second, it is also no-brainer that this downturn will push us on down trading of brand. Value for money brand ज़्यादा बिकेगी, अल्ट्रा लग्जोरियस ब्रांड कम बिकेगी. तो हम भी अपने पोर्टफोलियो में चेंज कर रहे हैं कि वैल्यू फॉर मनी ब्रांड की तरफ जाए. बट ऐसा नहीं है कि मेरे पास हर क्वेश्चन का सोल्यूशन है. एक दुविधा जो मेरे मन में है आज, जिसका मुझे कोई आंसर नहीं मिला है अभी तक, कि जनरली जब डाउनटर्न आता है तो लोग छोटी छोटी कीमत की चीजें खरीदेंगे, बट बड़ी कीमत वाली चीजें डिफर कर देंगे. जैसे आज अगर मेरी बेटी मुझे कहे पापा गर्मी बहुत लग रही है, एसी ला दो, मैं उसे कहूंगा नहीं बेटा थोड़ी देर रुक जाओ, जो एग्जिस्टिंग एसी उसी से काम चला लो, नया एसी अगली सीजन में लेंगे. बट अगर वो आइसक्रीम मांगेंगे तो शायद मैं दे दूंगा. नाउ विल दिस अप्लाई टू ऑटोमोबाइल? क्या लोग अपनी गाड़ी खरीदना, स्कूटर खरीदना, टू व्हीलर खरीदना डिफर कर देंगे बिकॉज महंगी चीज है, या दे मे differ everything else but buy a vehicle so that they can stay away from public transport. They don't have to use Ola and Uber. Now, कुछ चीजों के आंसर हमारे पास नहीं है, कुछ चीजों में हम आंसर्स लेने की कोशिश कर रहे हैं और उस हिसाब से हमारे पोर्टफोलियो को बदल रहे हैं. निकुंज भाई, हम भी यही कोशिश करते हैं कि जितना ज्यादा डेटा प्रोसेस कर सके, जितने मन दिमाग को खुला रख सके, उस तरह से सोच समझ के अपने पोर्टफोलियो में चेंज किया जाए. पैनिक में डिसीजन नहीं लेंगे, रिसर्च करके डेटा एनालाइज करके डिसीजन लेंगे.
If I can just speak on behalf of people who are on the mutual fund industry, and I'm going to risk my 20 years of reputation here. I guess Indian mutual fund industry, and this is for some of our friends who are watching us on Facebook and also on webinar, is run by some of the finest fund managers who are committed and who are committed to create wealth for you. Mutual fund is a pass-through mechanism, and this is the only mechanism when the tide goes strong, things will look up. Like everything in life follows a cycle, and in the economy right now, there is something called a cycle. So I just want everybody to realize that there are 4 events which are at play. First, medical crisis. Second, collapse in crude. Third, we have unprecedented action which is coming from government in terms of central bank, printing money. Now these factors have never come together. And क्योंकि factors एक साथ नहीं आए हैं, world is changing. And this is the reason why sometimes there is panic and sometimes there is anxiety. And Sunil, you may want to come in here, or I'll go to Ashwini actually for this one. So Ashwini, let's get that Punjabi tadka in your voice in this one. People are comparing a 10-year return. But do you think it's unfair to compare a 10-year return? Because what you are doing, Sunil, right now in equity and debt, you are comparing the low point of the cycle. This is not the way to compare. One should compare the returns when the life and things are normal. Would you agree with me, Ashwini?
Totally, absolutely. So these things happen, and the strange part about equity is that if it is at 42, लोग बोलेंगे अरे 42,000 है, 42,000 पे 45,000 पे जा रहे हैं. आज 28,000 पे आ गया, वो बोलेगा नहीं 28,000 पे मत लो, 25,000 पे आ जाएगा. So as you said, we are in a war, and just look at 1962, 1965, 1971. In 9 years, we had 3 battles, and we got out of it. You think of the history of the world wars, and in the world wars, all the manufacturers what were they making? They were making aircraft, missiles, ships for the war effort. This is different, as you have said, right? It is a medical emergency. You have had the economy slow down. Everything is in a shutdown. But from a valuation perspective, if you see, when you do a DCF kind of evaluation, what is 1 quarter or a 2 quarter in the life of a company? So back to the same question, right? आप अगर बोल रहे हैं कि 10 साल में आपका return ठीक है या नहीं है, you are talking at a low point. Let's see, 1 year from now, where the entire thing is, the economy is going to come back. It is going to readjust. Look at the way RBI has acted. Look at the way oil prices have benefited us. So if you take the sum of the entire thing, I don't think that in panic, anybody should actually be exiting the market now. Have trust, and you've just said that we have had some bunch of great fund managers. एक ने अगर गलती कर दी तो ठीक है, उसको पीछे छोड़ दो यार. Between yesterday and today, nothing in the economy has very frankly changed. So all this thing about panic is uncalled for, very frankly.
Okay. Bala, I'm getting a lot of questions on liquid schemes, and I would imagine that there are a lot of people who park their surplus money in liquid schemes. Small saving rates have come down, bank saving rates have come down. So Bala, if you have to, let's say, just briefly explain the mechanism of liquid fund and why people who invested in liquid fund, they should not worry about permanent loss of capital. Because I think, Bala, everybody in this webinar are asking simple questions. We never thought that debt में हमारा capital loss हो सकता है, जो कि permanent हो सकता है. I think that is something we need to address. Bala.
Yeah, I think the way the liquid funds are managed and regulated by SEBI is with the condition that it has to invest in papers which have got maturity from 30 days to 60 days. So that's the fundamental principle on which money is invested, which essentially means every 60 days, the underlying investments get matured, again gets reinvested, and again get reinvested. That means essentially in a year, in a 12 months of year, it gets churned, the portfolio gets reinvested 6 or at least about 8 times it gets reinvested. So it gives an opportunity for the money managers to look at the way his credit portfolio is constructed, the way he has chosen his credit, the way he has chosen his rating of the papers, the way he has invested in securities which are liquid and liquid and so on and so forth, the way in which he has invested in the various sectors. That is one of the precise reasons the liquid funds ever in the past had not given any kind of shock to the investors, except on the period. And what the regulation also says that if the interest rate moves up, let us assuming interest rate is 5% today, and then 5 goes to say, let us say 5.5%, the 0.5% increase in rates has to get reflected on the mark to market in the portfolio. So there is a high probability there are days where you will see the portfolio would have given negative. As Nilesh mentioned earlier, in the month of March, liquid funds gave a negative return. The moment gave a negative return, as we moved into the month of April, the April gave a return of about 8.5% because yields rallied, and then the portfolio valuation also came in the liquid fund portfolio. So therefore, in the liquid fund portfolio, I think broadly, while of course most of the money managers are extremely cautious about the quality of the portfolio, credit quality of the portfolio, liquidity of the portfolio, the way they maintain the liquidity, and therefore one should not worry too much about the liquid fund investment, what they use it as a parking in the liquid funds. Also, you must note the entire country, they have big corporate treasurers who have huge amount of surplus money. The scheme they park their money is the liquid fund. If they are worried about the liquid fund, both on the credit quality as well as the liquidity of the portfolio, they will never invest at the end of the day. It's huge surpluses which they are highly responsible for the shareholders and the board, and they will never invest this money in the liquid fund. They are the people actually the largest investors in the liquid fund. Therefore, that I think the retail investors or HNI investors should not have too much of concern on liquid fund. Purely in the base of the way the construct of the portfolio is guided by the SEBI as well as followed by most of the money managers.
Okay. Nilesh bhai, coming back to you, again, I'm going to blend two questions into one, Nilesh bhai. It is about lockdown. First, Nilesh bhai, is that if the lockdown extends, a lot of companies will have a cash flow problem. The intentions may be right, but it will be difficult for them to manage their debt levels. So AAA could start losing its relevance. Also, if the lockdown is removed and if liquidity is there in the system, what are the chances that what is down today can come back equally? So I'm blending two questions into two.
Sure, Nikunj bhai. I'm taking the liberty of opening my video and hopefully it stays. This is very, very back of the envelope calculation, very, very simplistic assumption. Please don't take it as scientific research. आज हमारी GDP $3 ट्रिलियन है. अगर हम 30 दिन तक धंधा बंद रखते हैं और हर महीने में 1 पैसा धंधा होता है, तो महीने का आउटपुट $250 बिलियन है. उसमें से आज फार्मास्यूटिकल कंपनी चल रही है, म्यूचुअल फंड चल रहे हैं, बैंक्स चल रहे हैं, स्टील प्लांट चल रहे हैं, फर्टिलाइजर प्लांट चल रहे हैं. तो मोटा मोटा अज्यूम करिए 50% एक्टिविटी चलती है, 50% नहीं चलती, तो आपका महीने का लॉस हुआ $125 बिलियन. आज स्ट्रीट ने एस्टिमेट किया है कि इंडिया का जीडीपी 4% कम होगा, तो मोटा मोटा ये $125 बिलियन टैली होता है. अब इस साल आपको ऑयल प्राइस में जो गिरावट आई है $40 बिलियन का फायदा होगा. आप ट्रेड डेफिसिट $20 बिलियन कम करने की कोशिश कर सकते हैं. अगर हम लोग चाइनीज गुड्स को खरीदने की जगह पे मेड इन इंडिया गुड्स खरीदे तो $60 बिलियन के ट्रेड डेफिसिट में $20 बिलियन कम कर सकते हैं। तो 40 और 20 $60 बिलियन इस लॉस में से ऑयल प्राइस और ट्रेड डेफिसिट ने निकाल दिया। रहा बाकी $60 बिलियन या $65 बिलियन का लॉस, उसको हमें मॉनेटरी स्टिमुलस, फिस्कल स्टिमुलस और डायरेक्ट इन्वेस्टमेंट से कवर करना है। $60 बिलियन बड़ा नंबर है, बहुत बड़ा नंबर है, बट $3 ट्रिलियन की जीडीपी में $60 बिलियन उतना बड़ा नहीं है। दूसरी चीज मैं लोगों को जो दिखाना चाहता हूँ वो ये है कि ये मेडिकल सॉल्यूशन है एक्स एक्सिस के ऊपर अर्ली से लेके लेट तक, और ये फिस्कल एंड मॉनेटरी स्टिमुलस लो से लेके हाई तक। हमारा सबसे फॉर्चुनेट सिनेरियो क्या होगा कि मेडिकल सॉल्यूशन जल्दी से आ जाए और फिस्कल एंड मॉनेटरी स्टिमुलस ज्यादा हो, तो हमारी रिकवरी वी शेप रहेगी। अप्रैल में जून में नीचे जाएंगे, जुलाई अगस्त सितंबर में ऊपर आएंगे। द मोस्ट अनफॉर्चुनेट सिनेरियो होगा जब मेडिकल सॉल्यूशन बहुत देरी से आए और फिस्कल एंड मॉनेटरी स्टिमुलस नहीं हो, तो एल शेप रिकवरी जोर से करेंगे बट समय लगेगा ऊपर उठने में। सो जो फ्यूचर है वो मेडिकल सॉल्यूशन के ऊपर और फिस्कल एंड मॉनेटरी स्टिमुलस के ऊपर डिपेंडेंट है। $60-65 बिलियन का जो जीडीपी आउटपुट लॉस है उसे हम कवर कर सकते हैं अगर थोड़ी मेहनत करे विद फिस्कल एंड मॉनेटरी स्टिमुलस और थोड़ा भगवान साथ दे फ्रॉम मेडिकल सॉल्यूशन। सो इफेक्टिवली अगर देखा जाए तो यस, दिस इज अनप्रेसिडेंटेड टाइम, बहुत कठिनाई है, बट ये समय से भी हम गुजर सकते हैं। कंपनीज को थोड़ा सपोर्ट करेंगे तो जो कैश फ्लो इश्यूज है वो सॉल्वेंसी इश्यू में कन्वर्ट नहीं होगा।
Okay, Sunil, the definition of a bear market is that you are in for a pain for a long period of time. In previous bear markets have corrected by 40 to 50%, even more in 2008. If this is a troubled time for the economy and this is unprecedented times like nobody is seen, then why should one expect a V-shaped recovery? Shouldn't this be a prolonged pain for a couple of quarters more?
So there are four things here which I want to point out. So there is a medical crisis, then there is an economic crisis which is accentuated by the lockdown, and then there is a market situation, right? So the question that you asked, Nikunj, is that when you say a bad market, you're talking about the stock market, right? Now, typically, when does the stock market have a bad market? See, the market is generally a harbinger of the future. That is, an economic event later, markets generally guess it in advance. That's why they call markets a lead indicator, right? So if you look at the market's behaviors, right? When the market is rising, they're expecting the economic good news to continue. And then when the market falls, it's telling you that's happened, and that's where the past markets have already frequently proved right. My point here is that when the markets have now corrected, right? The correction in the market has showed the economic lockdown effect which has happened, right? Now, when the recovery happens, so look at this. I would like to take some points from what Nilesh bhai said. So, first of all, whatever we say, you can't expect this medical crisis to last for, let's say, a year. I'm taking a very, very extraordinary question. I'm more optimistic of a shorter term, but let us take a year's time frame just to satisfy all the pessimistic people, right? But in a year's time, right, what happens to the reactions? So first is for India, there are two huge positives from this. Actually, three positives. First, I think India today stands number one as a medical response, right? No other country with this kind of a population, this kind of a paucity of medical infrastructure has taken such a strong and effective action on the medical crisis. So that's India's positive, that we have not allowed the medical crisis itself to become a huge problem for our country. Second is the oil price drop. As I mentioned in an earlier talk, we had prepared as an economy for a $75 oil price. Today, even the best of analysts are not predicting better than 30. So you need to take 45, 50. India is in for a long period of soft imports from an oil, which will have a positive impact on inflation also. The third aspect here is that given all the noise around China, A, that they caused it deliberately, B, that they knew about it, didn't tell the world, C, has led to some degree of a confidence crisis on China being that huge manufacturing supplier. And if you look at the India's demographic dividend, right, even if 10%, the surplus of China to the US is $500 billion, India's is at $50 billion, roughly. So we need only a 10% shift from China to double our export surplus to the US. So with the age of our population, which the low per capita, China is at $10,000 per capita, we are at $2,000 per capita. So the shift of balance of power, India has today, I would say, taken the moral leadership in the world with the way we have not only managed the crisis by our stance on hydrochloroquine, in being generous in giving out, in coordinating the SARC the joint support. So I would say this point of time, the next 5 years is actually India's years. Second, third point, the common feature of the world in response to any such crisis is to pump liquidity, cut interest rates. Right. So that free, easy liquidity means that ultimately it will find its way, the water finds its highest level, liquidity will find its way to the stock market. So even if the economy, I am very confident of a U-shaped recovery of the economy. It may be V, may not, but definitely a U-shaped recovery. But the markets will still show a V-shaped recovery because all this excess liquidity with the dynamics of power changing in favor of India, will see that India, all the FII money that's flown out of India will come back with the greater speed over the next 12 months, mind the time frame in mind. And when that happens, because India's economic future at that time will look good, the markets being the lead indicator will rise well before the economy rises. So that's where I'm confident that the markets will show a V-shaped recovery, even if the economy does not. The only question is, when is that V actually going to start shooting up? So that's the uncertainty. You just have to wait through that period of uncertainty, but the gains will more than compensate you for any corrections that have taken place. And my final point, Nikunj, is any bear market right through, right? A bear market is only where each rally is lesser than the previous. But there are rallies in bear markets where mutual fund managers can do tactical deployments and still deliver good returns to their investors. So bear market doesn't mean everything is down, down, down.
Okay, fair point. So I'm in the last leg of the webinar. We've got 750 people, loads of questions coming off all the webinars we've done. I mean, this clearly is the most exciting one. I'm so glad and grateful to all of you that we've come on the same forum and we're trying to address the investor anxiety here. A lot of distributors, I can also think they've also, joined in. I'm going to go back to the basic question, Mr. Venkatesh. Again, this is about what role regulators should play in this, RBI, SEBI, or government when it comes to the Franklin incident.
So generally, when you look at this sort of crisis management, the financial manager, that is the Reserve Bank of India, will definitely have to play a role to ensure that liquidity is provided at all times and in abundance. Plus, the cost of liquidity has to be reduced to a substantial amount by cutting down rates. So that is what he's doing when he announced even out of turn liquidity measures. If we look at the SEBI as a regulator for the capital markets, he will have to ensure that the markets function efficiently and smoothly, and any distortions are ironed out. So towards that, maybe the SEBI as a regulator will definitely have a close monitoring of the markets and ensure that whatever is required to ensure the smooth curve in the market, he will ensure that is done. But having said all those things, government is a ultimate person who takes the risk of the economy. So the government will have to come up with some stimulus to ensure that the pandemic crisis that we are fighting, along with the slowdown in economy, is not allowed to continue. So to that much extent, he will definitely come out with fiscal stimuluses to ensure that the slowdown of economy is arrested and we come on top of the crisis as well. So I'm quite sure all the three are playing their part together. They are closely watching the markets, they're closely watching the unfolding of the events that are happening. And I'm quite sure that all the three will put in a concerted effort to arrest the whatever crises that are coming out, whether through the pandemic crisis or through the economic crisis or through the market crisis for that matter, and ensure that everything comes back to normal at the earliest.
Okay, fair point. Okay, I just want to remind everyone, or perhaps share with everyone that 3.5 years ago, when Nilesh Shah felt that it was time to buy into gold, he was very open about it. So I guess it's very easy for all of us to look at FT and then look at the entire mutual fund industry that they've been underperforming. So this is a difficult time, but it's not that mutual fund industry is not given returns. And, you know, I'm a big votary for it because personally, that's one way where a lot of wealth has got created over the year. But Nilesh, my question to you is that you've been very open about discussing asset allocation. And I'm going to ask this question to everybody. This is the last round of question. If somebody has to, let's say, park money for next 1 year, 3 year, 5 year, and 10 years. So at the current juncture, Nilesh bhai, what should be the balance for someone who can take very little to moderate risk, 1 year, 3 year, 5 year, and 10 year beyond? Nilesh.
So if you are looking to invest for 1 year, my recommendation will be to invest in gold ETF or into short-term bond fund. Don't invest into credit risk of short-term bond fund, but invest into low credit risk short-term bond fund. So between gold and fixed income, your 1 year allocation should be there. If you are looking at 3 year, then you could invest into equity as well. So between gold, fixed income and equity, especially large cap, 3 year allocation should be there. On a 5 year basis and a 10 year basis, allocation will remain between gold, fixed income, equity and global assets like global equity fund. But the proportion could be tilted more towards equity as you extend your time horizon from 3 years to 5 years and 5 years to 10 years.
Right. Okay. Bala, same question. 1 year, 3 year, 5 year. And if somebody has to keep a SIP, should it be more tilted towards large cap or more tilted towards small caps? Bala.
Yeah. I think the way I look at it is, Nikunj, is if it is a 1 year money, naturally fixed income is the only options, and within that a low duration fund or banking and PSU funds or corporate bond fund, which essentially focus on high credit quality instruments, and with about 1 to 1.5 years kind of duration. I think that's the right thing to put in with respect to the 1 year investment. If it is 3 year investments, also one should have a mix of fixed income schemes as well as large cap equity fund. And if it is more than 5 years, one should have a mix of a large cap, multi cap, and mid cap as a combination. These are 3 combinations which you can take, and if it's a 5 year period. At the same time, I think one should, I think the SIP is one question with the Nikunj. I used to hear this question after 2008 crisis. Every time people used to ask this question, should I cut my SIP or should I continue? And that remained for almost a period of 2 or 3 years, from 2008, 2009, 2011, and the 2013 and 2014 when the market went up very sharply. All the concern that one would have had on SIP not being up to the mark got corrected, and one good market that just reversed the whole experience for the investors. And again, SIP, one must remember that SIP is being done for a longer period, longer term period with some kind of specific goal in mind. Therefore, that SIP is something one should not actually just pause it. One should not cancel it, one should not pass it. I think they should continue to make the investment. And in order to ensure that you get the right mix of allocations, I think when you do an SIP within the fixed income schemes, equity schemes, I think one should choose, say, 40% to the large cap, roughly about 30% to the multi cap, and about 30% to the mid cap. And that can give you a reasonably good experience when you look at a totality on the portfolio.
Okay.
Just one thing which I just wanted to, I think I saw a lot of questions coming on AFT, when will they come back, etc. I just wanted to tell the audience for their benefit. I was talking to Sanjay Sapre in the afternoon today, and for something else, with the CEO of Franklin Templeton. And he was just generally mentioning to me that they are actually planning a full plan. They'll come out with the press release either by today or tomorrow, and in order to give some kind of clarity to all the investors of Franklin Templeton. I thought I must take this opportunity to mention because a lot of questions are also coming on those lines.
Okay, just can you share that again with us, Bala? Because everybody's frankly wanting to understand where the unit holders of Franklin are headed. What is your conversation with them?
Yeah, I just had a chat with Sanjay Sapre. I just telling him actually that since everybody is concerned that money in our fund is gone and you're not come out with any kind of clarity yet as to how the investors are going to get back the money. He just mentioned that, well, I'm just looking at the portfolios, dividing them into 3-4 parts as to how much the assets can be liquidated immediately. The choice that he has is, should I liquidate aggressively, or should I actually take some time, liquidate at a reasonably good price so that I don't incur any loss to the investors, and then look at the whole portfolio and then what is the time frame by which he can liquidate. See, actually, he said, I'm going to just put a whole note and frequently asked question which comes that that investors normally ask. So we'll come with a complete clarity on the roadmap either by today or tomorrow. So that's what you were just mentioning that even if I think if it gets it, I think it should be good. I just thought I should mention that most of the people keep having this in mind. There's a lot of questions coming in that. Yes. I'll mention this. Yeah.
Thank you very much, Bala. Thank you for pointing that out. A lot of questions were coming on where what should people expect or unit holders of Franklin scheme should expect. So Bala is telling you that you should hear from them in next 24 hours to next 48 hours. Okay, I'm going to take one last question from Ashwini Bhatia. We've really gone over on the webinar. So Ashwini, the same question, 1 year, 3 year and 5 year beyond for somebody who has to invest, what should be the choice of instruments and schemes here?
So 1 year clearly would be short-term debt. So it could be either a savings fund or an ultra short fund. If you are 3 year, 80% in debt, 20% in index. If you are 5 year, make it 60% equity, 40% debt. Within equity, more to large cap. If you are 10 years, then of course you can add a bit of mid cap and small cap also. Debt can be about 20% of that.
Okay. Well, I'm going to, just thank all of you before we end the webinar. Thank you all for joining us. We've had a wonderful participation. This is a time when perhaps there are no easy answers, but the attempt here was really to try and bring facts out. There are a lot of things which will unveil as we go on because of this medical crisis. But over the years, what we've learned by tracking financial markets is that if you buy greed and if you sell greed and buy fear, your patience is always rewarded. So this is the time not to panic, but to perhaps keep patient. And mutual fund industry is no, homogeneous basket. There are good funds, there are bad funds. Just because an accident has happened with one scheme, that does not mean every fund manager or every scheme, bad. Thank you all very much for joining us on the webinar, and a big thank you to all our panelists for their time, and thank you for spending your 1 hour of Sunday afternoon. Thank you very much.
Thank you. Thank you.
Thank you. Thank you.
Thank you.